And the retail inflation for February came in at a 4-month high of 2.57% versus 2.05% in the previous month. However, the uptick in the CPI is well within RBI's comfort zone, giving the central bank enough room to cut rates in April. Meanwhile, the factory output for January slowed down to 1.7% versus 2.4% in the month-ago period. In fact, manufacturing output growth almost halved to 1.3% versus 2.7% in the previous month. Let's also go across to Maithili Bursuma to understand the slowdown in the factory output.
As far as the industrial production is concerned, the number is exceedingly disappointing. Just 1.7, even lower than the number that we saw the previous month of 2.4%. Clearly, the Indian economy, particularly industrial production and within that manufacturing, is not going anywhere. This is very surprising given that the fact that the government has done whatever it could to increase demand, stimulate the economy. Clearly, we are seeing the lagged effects of high real interest rates, and it might be a little late in the day for the Reserve Bank of India to do anything at the moment. So I'm afraid the government will have to go into the elections with the index of industrial production and manufacturing in particular, the sector which is expected to provide jobs, not looking attractive at all. On the inflation front, the news is slightly better. Of course, inflation is still very low at 2.57%, but it is an improvement from 2.04%. Remember, we are now battling the problem of too low inflation, particularly negative food inflation. And there the news is a little better because food inflation is still negative, minus 0.6%, but it's better than the number of almost minus 3% that was seen in the month of January. So overall, not very happy numbers for a government which is on the brink of election. Certainly, its hands are tied at the moment because of the Model Code of Conduct coming in. There's not much the government can do. The ball is now in the court of the Reserve Bank of India, and the next meeting of the MPC is only in April. So overall, I think we'll have to wait and watch and hope for better news once the elections are over, and hopefully we have a stable government in place.
Let's also listen in to what the analysts and experts have to say about the IIP as well as the CPI numbers.
If you really look at the maths, right, while your policy rates have come off, we're still at a very, very high interest rate scenario. And we need to have a sustainable low scenario. We have a comfortable CPI at this moment, at this juncture. As long as it's below 3, below 4, we should be more comfortable about it. And I think in the last policy, RBI did say that once the inflation is curtailed, one should be focusing on growth, and I think that's the only way the growth can come.
Thankfully, we have seen over the last few months the liquidity situation improving to some extent, and our sense is that there will be continuous support on that particular front, as well as rates are being adjusted towards at a lower level. So overall, yes, to an extent, tighter monetary policy had some kind of a role in inflicting additional deceleration in growth, but to some extent that is being adjusted at the margin.
Believes that it's a 25 basis point cut in April and not a 50 basis point. But I think, yes, if growth continues to slip and over the next couple of readings, if growth disappoints, I think there are chances that the RBI will have to continue with the rate cut cycle.